2023, Dollar Tree segment and the Family Dollar segment had a similar number of stores operating. But as you can see, Dollar Tree tends to generate higher revenues and higher margins than Family Dollar, accounting for 54.8% of revenues in 2023.
Turning our attention to the top left, we expect the total number of stores to increase well into 2028, with the majority of the growth coming from the Dollar Tree segment, whereas management has also recently announced the closure of 600 underperforming Family Dollar stores. Moving to the geographic map on the right side, the distribution of stores very well represents where the current population centers are and where they are migrating to. Lastly, to highlight the chart on the bottom left, we notice an increase in overall market share ending at 30% in fiscal year 2023.
We will now focus on our investment thesis, which we base on the company's strategic initiatives and split into 3 pillars, and which we believe will boost sales growth and profitability for the company over the next few years. Our first pillar is the newly differentiated pricing strategies. The second pillar is the innovative store formats to enhance customer experience. And the third is the supply chain initiatives to increase operating efficiency. In our first pillar, we focus on the Dollar Tree segment's 2 distinct pricing initiatives. The first being the Dollar Plus, which raised the base price point of its products from $1 to $1.25. And then more recently, the multi-price strategy, which raised the base price point from $1.25 to a variety of $3, $4, and $5 products, with an initial focus on the frozen section. In 2024, Dollar Tree aims to include the multi-price strategy in new consumable and discretionary products with prices ranging from $1.50 to $7. Looking at the chart on the top right, you can see the implementation of the multi-price strategy in the frozen section. In the past, in a typical 10-door cooler for Dollar Tree, all of the products were at the $1.25 price point in all 10 doors. But in the future, the company aims to have 8 doors of the 10-door section at the $3, $4, and $5 price point. Moving to the pictures on the bottom left, you can see the left picture shows examples of $1.25 frozen products, which tend to be single-serve meals. And then on the right, you can see examples of multi-price frozen products, which tend to be multi-serve meals. For our second pillar, we will be focusing on the 3 new innovative store formats that the Family Dollar segment has implemented. The first being the H2.5, which is the primary new store format. The second being the Rural Stores format, which is larger than the H2.5 and includes Dollar Tree products in addition to the Family Dollar products. And then the third store format being the Extra Small Box format, which is smaller than the H2.5 and tends to be implemented in urban areas. Looking to the chart on the top right, you can see Family Dollar's 3-pronged initiative to enhance value. The first part being the private label offerings, which is a shift from control brands to private labels. And the second being the addition of gondola units in its stores, which raised the base shelf height from 72 inches to 78 inches, allowing for a wider assortment of products. In the chart on the bottom right, you can see that Family Dollar plans to have 1,000 project renovations per year over the next 3 years, and Dollar Tree plans to implement its multi-price strategy in 2,000 stores per year over the next 3 years. And for our last pillar, we will focus on two key supply chain initiatives. The first being on the top left, which is the construction of the dual banner distribution center in Ocala, Florida, which is the first of its kind, as it includes both Family Dollar and Dollar Tree products. And then moving to the top right, you can see that the fleet ownership program for Dollar Tree has recently been implemented, and the Family Dollar segment is implementing a modernization initiative for its currently existing fleet.
Now for an overview of the C-suite. Dollar Tree's management team has had a relatively short tenure, starting within the last 2 years. However, we believe that their years of proven industry experience will allow them to use their expertise to be good stewards of the company. Under this team, many new growth initiatives have been pursued, and we expect these to bear fruit in the coming years and return value to shareholders.
With the context of our investment thesis in mind, we can now review our financial projections. Based on management's guidance, our analysis, and the company's strategic initiatives, we believe they will be able to improve EBITDA, net income, and earnings per share on a go-forward basis. What we really want to highlight on this slide is the bottom 2 charts, which break down the Dollar Tree segment and the Family Dollar segment in terms of revenue, gross profit, and gross margins. As you can see, the Dollar Tree segment on the left-hand side tends to be their profit maker with mid-30 margins, while the Family Dollar segment on the right-hand side tends to lag behind with mid-20 margins. Going forward, we expect both segments will be able to improve their overall margins, as the Dollar Tree segment has already seen higher traffic as a result of their multi-price rollout, and Family Dollar will be able to benefit from new assortments, their private labels, and their new store formats. Moving into our valuations, we took 4 different approaches, the first being a DCF, where we arrived at a price target of $147.41, representing upside of approximately 11%. Our second approach was a sum of parts, where we arrived at a price target of $145.22, representing upside of approximately 9%. And the lower price target here is likely a result of the lack of free cash flow in the early years of the valuation on the Family Dollar segment. Our third approach was a historical multiples, where we arrived at a price target of $137.06, representing upside of approximately 3%. In this valuation, we used an adjusted price to earnings, adjusted enterprise value to EBIT, and adjusted enterprise value to EBITDA. Lastly, we used a comparable multiples valuation and arrived at a price target of $167.86, representing upside of approximately 26%. As you can see in this valuation, we only included dollar store peers in our actual output of our price target, but have listed 3 other aspirational peers on the right-hand side. By weighing all 4 of our valuations equally, we arrive at our 12-month price target of $150. Hence, we are recommending Dollar Tree shares as a buy.
Now moving into ESG. So this first point represents Dollar Tree's most recent environmental policy. So they announced their chemical and electronics recycling program, which is in order to reduce labor costs and compliance costs relating to both disposals and waste management. They also continuously highlight the importance of LED lighting and energy management systems throughout their stores in order to continue to lower costs and reduce emissions. In 2022 alone, Dollar Tree has opened over 400 new stores to comply with their in-store energy efficiency standard, investing a total of $45 million into these upgrades. The next point is Dollar Tree's net zero commitment. So this is broken down into 3 scopes. The first is direct emissions, the second is indirect emissions from heating, cooling, and electricity, and the third is indirect emissions from all of their daily operations, which they expect to reach by 2050. Dollar Tree has a strong commitment to this plan, and in 2022, they have recycled over 370,000 tons of cardboard, paper, and plastic. Dollar Tree also has a strong commitment to diversity. Dollar Tree has the most diverse customer base in retail, with 50% of Family Dollar and 37% of Dollar Tree sales coming from non-white shoppers. Additionally, 56% of employees within the company are ethnically diverse. In the area of governance for Dollar Tree, most sources give a mixed bag of scores, but overall their ratings seem to excel in audit and shareholder rights due to their transparent financial reporting, compliance with regulations, and active shareholder engagement. So now moving into risks, this first point represents Dollar Tree's exposure to inflationary risk. So higher inflation can cause them to have higher operating costs, and it can also deter consumer spending in the stores. The next point is supply chain difficulties. So since Dollar Tree has high exposure to China, this imposes political risk, which can lead to them not being able to get their products at a reasonable price, and it can also cause slowdowns in merchandise shipping. The next point is store expansion risk. So if Dollar Tree is not able to reach their net store growth targets, this could ultimately cause them to miss on their sales expectations. Next is consumer trends. Dollar Tree products tend to contain high amounts of sugar and fat, while consumers seem to gravitate towards more healthful products. And the last point is shrinkage levels in both Family Dollar and Dollar Tree stores, but it's putting greater pressure on Family Dollar stores. Management has extensively spoken about these increased theft throughout their stores, which materially affected Dollar Tree's EPS.
To reiterate, we are recommending Dollar Tree shares as a buy with a 12-month price target of $150. That concludes our presentation. Thank you, and we're happy to answer any questions.